Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Jal Jeevan. I'll take you through all the top headlines and the stories that's there on the Economic Times as well as the Times of India. So let's get going with the top 10 headlines on the Economic Times this morning. And first up is this story here. The promoter-driven companies oppose SEBI's plan. Moving on, you have RIL's rights issues shares that will be listed today. Moving on, Reliance Jio and Brookfield deal, the MHA has okayed the equity part of it. Moving on to RBI, they've moves may bring new players to the banking sector. Moving on, Pramod Bhasin's Clix seeks merger with Lakshmi Vilas Bank. Moving on, you have KKR ahead of PE rivals in race for JB Chemicals. Johnson & Johnson expects a nod for COVID vaccine by early 2021. Moving on, Prime Minister Narendra Modi may advise chief ministers to keep guard up. Home Minister Amit Shah steps in to help Delhi combat the pandemic. And lastly, government to pump in 30,000 crore under Jal Jeevan. And those were the top 10 headlines as there on the Economic Times. Let me move on and let me talk about the top market headlines as there on the Economic Times. Firstly, RIL's partly paid up shares may list at 50% premium. Moving on, earnings fear kills appetite for mid-cap funds. Mutual funds focus on companies with large market shares. Moving on, smaller MFIs open for merger or buyout. And lastly, Vodafone Idea pays 102.7 crore interest to Franklin. And moving on now to the corporate headlines as there on the Economic Times. First up, you have government weighs a cheaper credit for airlines. Vodafone Spectrum as guarantee offer, that's DOT in a fix. Amrapali projects, NBC fast tracks the execution for it. Steel cement demand may fall sharply in FY21. And lastly, soft drink production's back to normal. That's the word coming in from Pepsi bottler. All right, and those are the top headlines on the Economic Times this morning for you. But let me get right up to the first story that's there on the ET front page here. This is the story that we are going to talk about, and that is SEBI plan faces resistance from promoter-driven companies. Here you go. This is the story that I'm talking about. What is the story? What does it actually talk about? I'm joined by my colleague Vivek Iyer this morning. Good morning, Vivek. Take us through this top headlines that's there on the Economic Times this morning.
Well, good morning. A very important development that's being reported as far as the Economic Times is concerned. So as far back as September 2019, the SEBI had actually said that it looks to create a more professionally managed companies in terms of companies listed on the Indian Stock Exchange. So one of the main things that they had in mind was that they wanted a lot of the companies to have professionally run board and not just be completely controlled by the promoters. And especially in companies where promoters own less than 50%, they wanted the board to have a say. And by the board, they meant a professionally run board with a whole host of industry experts to present as far as the entire board decision-making capabilities was concerned. However, what has actually happened is that given the fact that you have so many disruptions come in, what at this point of time they feel is that most of the promoters are saying that it is not really viable to meet most of the deadlines. Also, what they are saying is that this will have that a lot of the promoters who are currently personally liable for fraud or mismanagement in the company, they believe that there won't be enough skin in the game. So this is going to be a very interesting development and very interesting story to track. And we'll keep watching out this space in the ET for more developments on this particular case.
Rightly said, Vivek. We will look out for more development on this particular story on Economic Times. But let's move on and let's talk about another story that's there on the front page of the Economic Times. And this is the story that I'm talking about, is RBI moves may bring new players to banking. So what is this all about? Let me read it directly off the paper for you. Focus on governance or ownership rules to address issues of capital, potential conflict of interest. They're saying that the RBI's back-to-back moves on governance at Indian banks and also a review of ownership guidelines and structures are likely to be stepping stones for letting industrial houses and foreign capital get a bigger slice of the banking sector amid the stretched government finances and insufficient private capital. Experts say the simultaneous movement in both governance and a likely change in rules could address the long-pending grievance of capital-flush industrialists and buyout firms seeking an opportunity in the financial services sector. What's in actually store? Enough checks and balances are likely. New government's norm to limit abuse by the promoters. They are saying conglomerates with NBFCs may benefit. Bigger investor pool if PSU banks divested. Postal bank can become full-fledged and lending to groups, companies to be in focus. So this is all what experts believe, that back-to-back moves by the RBI may bring in new players in the banking space. But from the banking space now, let me move on and let me talk about this story, another story that's there on the ET front page right here on the bottom right side. That is a Brookfield deal. What it talks about is that Brookfield Tower deal, the MHA has okayed the equity part of the deal. They've also asked DOT to seek market regulators' view on the debt portion. The Ministry of Home Affairs has approved the equity component of Reliance Brookfield Tower deal that is worth 25,215 crore rupees. But they've asked the DOT to seek the SEBI's view on debt part of the transaction, possibly delaying the entire final clearance coming in for this particular deal. The call DOT to consult SEBI on structure of 25,215 crore debt, 25,215 crore deal. Bone of contention is the debt component. SEBI has approved the deal last year. It responded to MHA's queries earlier this year. They're also saying the deal was announced in July last year and MHA has approved the equity portion of this particular deal. So this is the latest coming in on the Brookfield Tower deal that's there on the newspaper, that MHA has okayed the equity part of it, asked DOT to seek a view of SEBI on the debt part of the deal. But let's move on to another story that's there on the front page of Economic Times, and this is the story that I'm talking about. The KKR races ahead of P rivals to close in on JB Chemicals buy. What is the story and who are the other players in race and how much is KKR bidding for JB Chemicals? I have my colleague Varun standing by to give us all the details of the story. Varun, good morning. Take it away.
For another week. So we all have been hearing that JB Chemicals is up for sale. All the PE players are trying for it. PAG, Bain, Apex and KKR. Now it seems that on Friday an exclusivity pact was signed where KKR is going to be the front runner in acquiring this stake. And it will involve the open offer, right? Because their stake will go above a certain amount. So then after the open offer, they might even own 80% in JB Chemicals. So KKR, according to sources, is likely to pay 750 a share. That's a 10% premium to the 2-week average of 690 rupees. And this will approximately give it a market cap of 5,500 crore. So that's the transaction. KKR already has a very nice healthcare portfolio. They have Genesis Care and Laser Clinics. They have Gland Pharma, which was sold actually. And so this is a good fit for their portfolio. And for JB Chem, it will give the Modi family the exit which they're looking for. So we will update you more as we hear more on the closing details of this transaction.
All right, thank you, Varun, for joining us and taking through that story. But let's move on and let's talk about another story that's there on ET front page, and that's Pramod Bhasin's Clix Capital. Clix Cap seeks a merger with LVB, that's Lakshmi Vilas Bank. To talk more on that, I'm joined by my colleague Chandra. Chandra, what's this entire details of this particular transaction that may happen? The board is likely to consider this particular merger proposal today.
That's right. Now, Clix Capital, if you recall, has been promoted by Pramod, Bhasin and Anil Chavla. Pramod Bhasin used to head up Genpact earlier and GE Capital Asia. And it is a digital lender backed by the likes of Aeon Capital. Now, the news coming in is that Clix Capital is now eyeing a majority stake in Lakshmi Vilas Bank, cash staff Lakshmi Vilas Bank, which has been looking for liquidity for some time. So as time runs out for Lakshmi Vilas Bank to infuse capital, the paper reports that Aeon Capital backed Clix Capital will buy a majority stake in the private lender. And they add that through its now NBFC arm Clix Capital, they may look at a deal where they buy over 51% in the bank, and a formal letter of intent will also be sent. So expect this to happen sometime today. Now, Clix Capital is a digital lending NBFC focused on various segments such as retail, consumer, small business, and equipment loans. It has assets under management of roughly 5,000 crore. It has been looking to diversify its resource base for some time now. So this is going to be an interesting deal happening in the banking space.
All right, thank you, Chanda, for getting us details of that particular story. But let's talk about GST, and here's the story that's there on the Times of India. It's in the Times of India business page. There are two stories of the GST. One is that GST mop-up doubles in the month of May, but it is 38% lower than what it had registered in 2019. And the other one is GST mop-up is hit by COVID and act of God. No guarantee for compensation to states in uncertain times. That's been hinted by the government. Amid the chorus of GST compensation from states, the centre has conveyed that there is a need to factor in the abnormal situation due to coronavirus pandemic, which is described as act of God, indicating that there was no insurance for 14% growth in GST collection during these times. So 3 years ago, while introducing the GST, the centre had promised to compensate states for the revenue loss if collection growth was under 14%. In a year, the compensation is a larger issue. The centre is not going to go back on its promise, but should it not enforce force majeure clause, since this is an event triggered by things beyond anyone's control, it is an act of God. That is what the government official has told Times of India. So there you go. GST mop-up hit by COVID-19 act of God and no guarantee for compensation to states in uncertain times. That is what is being hinted by the government. But let me move on and let me talk about the story that's there now on your ET Markets page, and it is about RIL. The RIL's partly paid up shares may list at a 50% premium. Analysts expect a debut at around 650 today. Investment at this price could give good returns over a year. Stock may appreciate by 25 to 30% CAGR over 3 to 5 years. This is what the analysts believe. So, buoyed by the strong response to his rights issue, the partly paid up shares of Reliance Industries will likely be listed at around 650 per share today at a premium of at least 50% of its intrinsic value. This is all as per market analysts. The intrinsic value of RIL's partly paid up shares is 397 a piece based on Friday's closing price of Reliance Industries and constitutes 25% of the fully paid up Reliance shares. So this is what the news is all about today, that the Reliance Industries partly paid up shares will be listing today, and they are likely to list at 50% premium. But let me now move on back to Times of India, and this is a story that's there on the Times of India front page. Give me a moment while I flip the pages for you and talk about the domestic flights and what's the latest coming in on that front. There you go. This is the story that I'm going to talk about. It's on TOI front page, and that is domestic flight operations at City Airport may double to 100 soon. Mumbai could see its scheduled domestic flights double from 25 arrivals and as many as 50 departures daily to 50 each this week. the Maha Vikas Aghadi government of Maharashtra has allowed scheduled flights to resume from May 25th. At that level, giving the spiraling cases of the coronavirus in the city. But due to a heavy demand for travel to and from Mumbai Chhatrapati Shivaji Maharaj International Airport, India's second busiest airport after Delhi's IGI, they've decided to go ahead and up the domestic scheduled arrivals as well as departures. So from 25, it is going to go up to 50 each week from this week. But let me move on now. That is what's come on the airlines front. But let's move on now, I think, to the top 5 headlines that's there on the Times of India for you this morning. And let's talk about, first up is about COVID-19 cases. Over 12,000 COVID cases for a second day. That is what India registered in 24 hours. Moving on, 5 states' positivity rate is down to 3%. Mumbai locals to resume for essential government staff only. You have domestic flight operations at Mumbai airport that may double. And lastly, rising star Sushant Singh Rajput ends his life. All right, and those are the top 5 headlines coming in from the Times of India for you this morning. But let me move on to another story that's there from the global front and is on your ET page 11. And that is Atlanta police chief resigns after officer shoots and kills a black man. Protesters set fire to Wendy's restaurant where Rayshard Brooks was fatally shot. Atlanta's police chief resigned on Saturday, hours after a black man was fatally shot by an officer in a struggle following a field sobriety test. The authorities said that the slain man had grabbed an officer's taser but was running away when he was shot. Police chief Erica Shields stepped down as the killing of 27-year-old Rayshard Brooks sparked a new wave of protests in Atlanta after turbulent demonstrations that we'd seen in the United States after the death of George Floyd in Minneapolis. So this is the latest that is coming in on that front in United States, that an Atlanta police chief resigns after officer shoots and kills a black man.